Joining us right now, Ravi Menon, lead analyst IT at Elara Capital. Ravi, hi, good morning. Good to have you on the show. It's that time again, kickstarting with the two big boys. So for Q4, what is it that you're expecting? Good revenue growth for most, but a margin decline. Do you think that's going to be the common feature?
I think so, but I think I'm a little ahead of consensus estimates that you discussed. I'm looking at 2.7% dollar revenue growth from both TCS and Infosys, and Infosys to have slightly more margin pressure, and TCS too I'm expecting slightly more. I think we are looking at 40 basis point QOQ margin pressure for TCS and close to 100 basis points for Infosys. And I also expect that Infosys will cut the margin guidance for next year to 21 to 23% from the current 20 to 24% EBIT band they've guided to for FY19.
So Ravi, when it comes to TCS versus Infosys, are you counting on the continued double-digit revenue growth commentary from TCS with stable margin, while Infy you think could guide for high single-digit growth but a risk to margin guidance? What is it that you're penciling in detail? And more importantly, are these factors already built into the stock prices, because they've done pretty well in the last 1 year?
I think that we are in a really good demand environment, that can last quite a long time, unless we have another, financial crisis kind of situation again. But I don't foresee that. So I think that next year will actually be better than FY19 for most firms. We are expecting, Infosys to probably guide to 9 to 11%. That's slightly better than what they've done this year. And we think TCS will also actually close FY20 better than FY19, though of course they don't provide guidance. And we think that TCS's case, there are margin tailwinds. They had some large deals ramp ups over this year. That's probably been a drag on their margin. They also hired a lot more people, brought down utilization over this year. That's what I expect. They don't disclose utilization. We think that these are margin levers that they have going into next year. While for Infosys, we think they will probably make some more sales and marketing investments. They have a large deal that's just started. They will start ramping up now with Verizon this quarter. That is a rebadging deal, and I expect that to put some pressure on the gross margin. So going into next year, that's why we think the margin gap will widen, and therefore we expect TCS to re-rate a little further compared to where Infy is. Now I think the discount that Infosys is trading at is too little to justify the kind of difference in margin that TCS will exhibit over FY20.
Ravi, both Infosys and TCS have seen a 30% run-up. Some would argue that irrespective of what we hear from the management today, it will be difficult for anyone to justify stocks which are trading at P multiples of 17, 18 times. Even TCS is more than 17, 18 times 1 year forward. Is my assumption right?
I think that TCS has really broken out into a league of global technology firms similar to Accenture. So you look at the return on equity, theirs is now coming closer to that of Accenture, and this is while they are still significantly net cash company, while Accenture is a net debt company. So I think that there is a lot of room for further market capitalization addition for TCS. In Infosys case, I think they are back on revenue growth. I think they are investing well for the future. So I think that over the next few years, I think that that stock should do well. But for the immediate future, I think TCS should do much better than Infosys.
TCS could do much better than Infosys. Where does the entire buyback angle fit in both for Infosys and TCS? Because they both have done buyback, and I think now they both cannot do buyback for 1 more year, right?
That is right. So you cannot make another announcement within 12 months. Yes.
So what could be the trigger for next 12 months? There is no buyback.
So for now, I think the buyback is supporting Infosys.
Yeah, I know. So okay, no. So Infosys buyback came second. So obviously,
I think that strong revenue growth. Hello. Sorry.
Yeah.
What's that?
So okay, got your point. Closing comments. For stocks to give 15% return in next 12 to 18 months. What would you like to hear from the management today which would convince you that even after a 35-36% run up in last 1 year, a 10-15% return is coming in next 12 to 18 months? What will convince you, and what is that one line, one comment, one number which will excite you?
I think in case of TCS, it'll be a strong pipeline, especially for the insurance BPaaS business they have in the US. That's what I expect. And for TCS, we think that that the continued strong demand outlook is what we're expecting. And for Infosys, we expect that they should make some sales and marketing investments. They should also talk about the large deals they won. That's what would convince me that. And if they actually say that they'll be able to maintain their margins going into next year, I think that will be a significant positive trigger for Infosys.